Hello and welcome to Market Insight, your trusted source for understanding the complexities of the commodity and the currency market. Each day we delve into the trends, as they unfold in the commodity market space as well as the currency market. We also uncover emerging trends and, basically to help you make sense of investment decisions you might want to make. All right, I'm your host, Adesua Iramosele, and I'm being joined by the MD and CEO of Najem Business Solution, Mr. Ben, and he is going to be here with us for a bit, to discuss this topic. He says Mr. Ben Nnamdi Okorie, and he would be having this conversation with us. So very quickly, let's give you some insight into what this topic is going to be about. But before we do that, we'll go on a quick break. When we return, we will give you what we have for today. Stay with us.
My name is Dr. Rafiu Oladipo.
My name is Baba Jalal Repega.
I'm Reverend Juliet Benite.
I'm Godio Didi.
My name is Professor Oladokun Sulaiman Olarawaju.
Sook News is on the ground, loading.
Very enlightening, very educative, and entertaining.
Thank you to Sook News.
So I'm happy that Sook TV has come into existence.
I'm happy to be here in the Sook News.
I want to encourage you to subscribe to the channel and keep watching news that makes sense.
As Browning said, one's extension of one's reach should not exceed one's grasp, or what is heaven for. And I think Sook News is doing that.
Africa needs a voice of truth, and Sook News has become one of them. And get ready, get ready, get ready.
And keep watching.
Keep watching Zook News.
Keep watching Sook News. It's a place to be.
Keep watching Sook News.
All right, welcome back. You're still watching Market Insight, and if you are looking for a place to showcase your products and services, this is the place you could do that. We would, ensure that you reach a larger audience. Welcome again to Market Insight. Now, yesterday we analyzed the report that stated that Nigeria ranked second globally, amongst countries with the lowest cost of living. That's according to Numbio's cost of living ranking 2024. Now today we would be addressing this new report, that states that Nigeria's broad money supply increased to 78.74 trillion naira as at December 2023, which is the highest ever recorded in the country. Now this is an increase of 26.58 trillion naira, or, you might want to say 51% increase, year on year when compared to 52.16 trillion naira recorded in 2022. Now, this is according to the latest data from the Central Bank of Nigeria, CBN, as contained in its money and credit statistics. Now, the broad money supply, which is also referred to as M3, is used to measure liquidity in the economy and has been on an upward trajectory in recent years, and of course at a very rapid pace. It comprises net foreign assets and net domestic assets. Now, in analyzing the Nigeria economic landscape, a critical lens must be cast upon the money supply. Now, prominent among these are the escalating inflation rates, mounting pressures on the Naira's exchange value, and a downturn in the interest rate. Now we have with us, like I said earlier, our guest, and of course we will be talking about this. Now to you, Ben, welcome to the show once again.
Thank you for having me.
Okay, it's good to always have you here at the show. What do you make of this report? I mean, just yesterday we were being told that Nigeria ranks one of the lowest when it comes to the cost of living, and now this is a different report. What are your thoughts about it?
When they say Nigeria ranks lowest in the cost of living, I don't quite agree with that report. Because recently the CBN governor came out to say that Naira is undervalued. And now if you weight the cost of buying a tin of pig milk, for example, in the United States, and compare that with the Naira equivalent and our exchange rate, you notice that Naira actually is undervalued. And when we say cost of living, what exactly is cost of living? What it costs me and you to buy the basic things we need to survive as individuals. So Nigeria at all, the cost of living is not cheap in Nigeria in today's time. Maybe if you are considering pre-devaluation of the pre-unification of the exchange rate, yes, we can say that the cost of living in Nigeria is relatively cheap. So if this report is as at before June 2023, when government unified, I would have agreed with you 100%. But the reality today is that Naira is overvalued, is undervalued, and that means our cost of living is not cheap as a nation. So I don't quite agree with that report, unless it's stating before June. Again, to speak to the topic for today,
supply, yeah.
for broad money supply for today, I want to just explain it to our viewers what broad money and narrow money is. And when we talk about narrow money, what we just mean is the money in circulation. So that money that the trader close to you is giving you as change, the money you are giving to the bus conductor, that's what CBN refers to as narrow money, in addition to the balances sitting in the current account of banks, of commercial banks and other financial institutions. So if you have any money sitting in a current account, which the liquidity is very close, so we measure it in terms of its nearness to liquidity. Because if you have a current account, it is presumed you don't need to inform the bank before drawing on your funds, and there are no penalties for drawing on your funds. Whereas when we talk about broad money supply, M3, what we typically is narrow money, which is money in circulation and current accounts, in addition to the money you have in both in term and fixed deposit accounts. You also refers to your domiciliary account balances and your net asset balance, offshore balances across the country. So those ones that are a little bit further to liquidity are what we call broad money supply. Now, why do CBN take time to measure both narrow money and broad money supply? That is the question you and I should be asking. How does it concern me as an individual living in the Nigerian economy? The truth is that the amount of money in supply is a precursor to what inflation is. So if you look at how much money you have, let me explain it to you. When they pay you salary, if you notice, you have a higher tendency to spend money, right? So when we have more money in supply in the economy, there is tendency that people have, will do what? Purchase more goods and services. And because there is too much money chasing a limited amount of goods, it gives rise to what? Higher inflation. So CBN measures it as an indicator to inflationary pressure. Thank you.
All right. Now, what would be the significance of this increase? I mean, saying Nigeria's broad money supply increased by 78.74 million naira. That's on a year-on-year basis, from December. Now, what are the primary drivers behind this record-breaking rise in the Nigerian broad money supply, basically?
Okay, so having explained the broad money and the narrow money, we now have a fair understanding what the two terms means. And the primary is just one driver, as long as I'm concerned, that is driving this increase in broad money supply. It means that the cost of living in Nigeria has risen, and that is why I didn't agree with the former statement. So let me paint the picture, so that we can relate with it. Before you had an asset, right? Maybe you had a property, a land, a car, but because your daily needs have increased, so the money you normally used to go to the market to buy a tin of tomato, a basket of pepper and all that have increased. You need to liquidate some of those your assets. That means you need to sell them, right? So that phone, the second phone you are now using, you go to Computer Village, you sell it. So that means you've converted an illiquid asset to a more liquid asset, giving rise to the money in supply. Some of us did have money in our domiciliary accounts, in our fixed deposit account, and we were moving the money to a more current account, or we are withdrawing that money to be able to pay our house rent, to be able to pay our children's school fees. That means we are converting the money we had in broad money to even narrow money supply. So what you see is that people are liquidating their investments, their assets, to be able to meet up with the current economic reality. And that is the primary driver behind the rise in the money supply. And that is also a reflection of the inflation we see happening in the economy. 2 years ago, Nigeria was running an average inflation of 17%. Last figure for inflation is 28.92%. So you see that the cost of things have gone up. So what that means for you is, and that is the weighted average inflation. If you look at the food inflation, which concerns, the average Nigeria the most, right, is because it's somebody who has catered for their basic needs that will look at what luxury products. So is the average food inflation that should be our major concern as Nigerians. So if you look at what the average food inflation is, it's currently hovering at around 35%. What it means is that on the average, if you used to buy a tin of tomato 100 naira a year ago, you'll be buying it 135 naira today. But the reality in the market, again, this is a weighted average. The reality in the market is that prices of goods have more than doubled. So what that means is that most people's income are fixed, especially for fixed salary income earners. And for business people, for those that operate in an inelastic market, they are not able to transfer the costs to their final consumer. So their margin is thinned out. So we see that relatively we have fixed income, both traders and fixed salary earners, but our costs of living has gone up. So making it a mismatch, or for us to do what? Liquidate some of the assets or investments we have to support our current daily spending, which is the narrow and broad money in circulation. So it has risen while our assets have depleted.
Indeed, you've made us understand the whole concept. Now, when people liquidate their money, what is the implication of all of that on the Nigerian economy?
So I will summarize it with a concept I call short-termism. And that simply means people are looking at today, right? People are looking at today, they're not looking at tomorrow. Why do people build houses? For renting, right? To earn rental income. But when I sell that house for rental income and I'm using that money to feed, that means I'm not developing my area, I'm not developing my country. I don't have money to put in assets that will build up the Nigerian basis. So you see that by the time people begin to spend on recurrent expenditure, there is no more money for them to do their individual capital expenditure. So you see a deteriorating state in terms of assets. So people that have houses need to deteriorate. People who have money for elaborate education system. So naturally, people that would have sent their children abroad to school, or people that would have sent their children for master's, PhD program, they won't afford that kind of life. They will not have to step down, which means the quality of graduates that we produce will also do what? Reduce. Again, people will not have money to invest in things like road infrastructure. Like if you notice what is happening in the urban area, most people have taken it upon themselves to provide most of these amenities that governments will naturally provide for them. Things like road, things like water, electricity, and all that. But because they don't have the luxury of income to invest in those assets, those things will suffer, right? And if you watch most developing economies, people that actually develop the economy, it's not just the government. The government's primary responsibility is to create an enabling environment. It is the private sector, individuals like you and I, investors like you and I, that actually develop the economy. But when the disposable income of these investors does not allow them to invest in those developmental activities, the economy in general suffers.
Indeed, this is quite interesting. Now, given the whole this whole trajectory, what is the CBN, supposed to do in this case?
So I hear a lot of people mention the CBN, the CBN, the CBN. Government has two major tools of controlling economic activities. The first is the physical powers that are vested in the presidency, and the second is the monetary activities of the CBN. But because of the inefficiencies that are existent in our physical sector as a country, we've overlabored the central bank, who is supposed to be independent and oversee the monetary activities of the country. And that have seen the CBN venture outside the space that they are supposed to perform in order to cushion the effect on the economy. And let me explain what I mean. I've spoken a lot of economic jargons. I want to break it down. So today, government primarily controls the economy through things like tariffs, duties, and taxes. The CBN controls the economy primarily through things like the money supply, the exchange rates, and the interest rates. Now, these are three different tools. But what has happened within the tax space in Nigeria? The tax space in Nigeria has been cannibalized at different levels. So when you walk out to the streets, who collects taxes from boxes? The arbitrers, who doesn't have an accountable system. So there is an income leakage at that space. Today, who collect taxes in the rural areas is almost non-existent. So all those housing permits and taxes that we should collect in the rural are non-existent. So you see that the economy is bleeding in those spaces. It is only the few formal sectors and the few urban organized areas that government have actually managed to collect taxes from. And the economy cannot survive without the other. So monetary policy cannot survive with the fiscal policy. Fiscal policy cannot survive with the monetary policy. But because fiscal policy is suffering, monetary policy is also suffering. So we are not collecting enough taxes as a country. So government needs to increase the tax base, right? We are not even collecting as much taxes as we're supposed to collect as a country. Again, we have porous borders that are allowing goods to do what? Seep into the country without proper what? Duty. So I'll give you the implication in today's society. You, as a trader that is buying tomatoes from a nominated distributor that is paying custom duty, cannot compete with that your next door neighbor that has tomato being brought in at the back of their boots through Cotonou border. What that means is that that person can't sell their tin tomato for 150 naira, whereas you cannot buy your own tin tomato for 180 naira. So no matter what monetary policy the CBN is putting in place, because that lapse is existing at the physical end, it becomes what? Counterproductive. Now, if you look at the recent announcement by government that they want to denominate collections from crude oil proceeds in the CBN. Again, is CBN venturing outside their primary responsibility. It also has its own implication. The implication being that the CBN will not have a lot to be doing on their arms, that they won't concentrate on their primary activity, which is actually what? To do what? Control the lending system and the deposit system in the country, which is commercial and other banking institutions. So by the time they begin to venture into activities that naturally the physical systems that government has put in place is supposed to tackle, it creates a vacuum in the monetary space.
Indeed, it does create a vacuum in the monetary space. Now, what sectors do you really consider would be very, much affected by this increase?
So when we say the increase in money supply, it will affect every sector. It affects every sector, but in different proportions. So if you see those people that are dealing more with cash, rudimentary transaction, right, it means that they have more money. So let me explain again for our viewers to be able to follow me. Prior to the cash crunch in the Q1 2023, we noticed that when you enter a bus, or what we popularly call Danfo or Korope in Lagos, and you don't have change to give your conductor or the bus driver will be shouting, "Hold your change, oh, hold your change, oh." But today, that is no longer existing. that is the effect of increased money supply in the economy. So it means that there is abundance of naira in circulation as at today, that you can be able to do what? Collect your change and pay. But the reverse affects those with structured businesses that are borrowing money from the commercial bank, because it is that fixed deposit, it is that savings deposit you have with banks that they consolidate and lend to a Dangote Cement, for example, to increase their economic activities. So what it means is that as you are transferring more money outside the banking system or into the current account, what you have is that the organized sector has less deposit to access for their activities. And when there is less deposit to access, naturally, the law of demand and supply, prices that they can access that's the lending rate the bank will give them that deposit at, will slightly increase.
Wow, and that's supposed to be a good thing, you know, having much money in circulation. Anyway, now this brings me to my next question. Can we sustain this currently, the way we are now in our Nigerian economy? Can this be sustained, and how long?
Personally, I'm not an advocate of too much money in circulation, and I will tell you why. When there are too much money in circulation, it creates room for inflation. That inflation has a cyclical effect that affects you and I. What that means is that the price I'll buy tomato will keep going up, because if the organized sector doesn't have their cost of input increases, it comes back to the person at the road, because they will ultimately buy their goods from the organized sector, right? And the cost of money in circulation, it is very expensive to print money. I hope we are aware. And that printing of money comes from the taxes that you and I pay. So for CBN to be able to maintain that level of money in supply, it requires them to constantly print and replace defaced currencies. So it's expensive to keep a high volume of money in circulation. And let's not forget that there also has the fraud aspect, right? When you keep too much money in circulation, especially too much money outside the commercial banks, what it does is that it allows for fraudsters to perpetrate fraud. It makes it ineffective for people like the EFCC and ICPC to track transactions. So let me give you an example. If someone has committed a fraud and moved the money from one bank to another, you can easily trace that fund. But once that person withdraws that money in cash, which is money in circulation, it becomes difficult for you to trace the fund. So having too much money in circulation, in fact, we should be preaching more of a cashless society than having too much money in circulation, in my own opinion.
Yeah, and well, that is a very valid point. But what measures can be taken actually to ensure that we have stability, you know, in our financial environment here in Nigeria?
Thank you, Adesuwa. That question is a broad question that should take about 2 days retreats and a whole maybe 500-page term sheet. The financial stability in Nigeria comes in different angles. And why people might think that I will tackle it from the obvious angles, I will come from things around the physical environment. So the first thing Nigeria needs to do to get the financial stability is to tackle security and corruption. Now, my viewers will wonder, how does that relate to financial stability? But the truth is that the bedrock of the Nigerian economy, right, is two things: crude and agriculture. Today, prices of food have skyrocketed primarily because of insecurity in the northern part of the country that have increased the commodities that we buy, and that is distorting the financial space. Again, corruption at different levels are distorting the financial space. So you need to tackle those two things first to gain some form of physical stability before we can talk of financial stability. Because no matter the monetary policy or financial policy that the government comes out with, until we're able to tackle the physical stabilities, they will be counterproductive. And I will give you an example. With all honest intention, government announced unification of exchange rates middle June 2023. Have we seen that actualized? The answer is no. So as much as government has tried to meet that rate 2 times, what we've seen is that the gap that existed in the parallel market has continued to exist. So before the unification, we are buying official exchange rate at 465, parallel market at 770. Government unified in June, 2 of them met at 770. In less than a month, we saw the gap again widen from 770 official, black market 900. Today, black market is going for as high as 1,000 naira, 1,475 naira, whereas the official exchange rate 3 weeks ago was still at about 800, 900 naira. Government has done what? Keeping to its promise, is trying to meet the black market rates at 1,400. But what you will see is, again, the state actors and corruption will allow the gap to widen. So until you fix physical stabilities, things around corruption, things around security, things around infrastructure, things around education, things around healthcare, you can't be able to gain financial stability. And that's the truth. Because today, what are the things that are driving our foreign exchange instability? So you look at the amount of people leaving the country, drawing on our foreign exchange. You look at our inability to produce PMS from our own crude. Today, what is the major component of our importation as a country? 80% of our imports as a country is motor spirits and gas oil. That is what we colloquially call fuel and diesel or AGO. It accounts for more than 80% of our imports. And we have crude oil, but we can't refine them. And we have 4 refineries. So you see that the problem is for financial. So how do we expect to gain financial stability when we need to always recourse outside to get something we can naturally produce in our country? So it's until we're able to tackle the physical stabilities, there is no policy that will tackle financial stabilities. If we like, let us say A, B, C, D, because the physical actors will always act against it, because the institutions are not there to tackle the physical inadequacies. So today, you say you want to tackle the fraud within, or whatever we want to call it, within the custom space. Good and well, is yielding the desired result. But give it another 2 or 3 months, Nigerians will fashion a way to do what? Set it back to the era where they are making what? Money from it. So the problem is not in you coming up with a policy to make getting your passports better. The problem is, the root cause is to tackle the corruption menace.
Indeed. You spoke about refineries. I mean, Dangote refinery to the rescue, right? Okay. So now let's, move ahead. What is the implication of this on the financial institutions we have here in Nigeria? Is this an opportunity for them, to leverage the situation and promote access to financial services, or what's your take?
So for financial institution, it now becomes a proportion of what narrow money is within the broad money. What the financial institutions control are money in current accounts, deposit accounts, time or term deposit accounts, and domiciliary accounts. Now, the 5th component of money in circulation is the money in your hand, in my hand. So when I open the purse, your purse, now the money there, or when I open my wallet, the money there. Those are the components of broad money. And of course, our offshore accounts. Now, what's commercial banks control are the first 4 that I've mentioned. So now the opportunity for commercial banks now speaks to the proportion of what each of these components is in the broad money supply. So if we have a greater portion of it in the commercial banks, it means that your deposit is the raw materials that commercial banks use in producing their own goods, which is what we call financial intermediation. So commercial banks, what they do is they collect money from you and I, they aggregate it, and they lend it to an individual. They pay you an interest for the money they've collected to you, and they collect an interest from the person they've lent the money to. So the difference, or what we call the spread, is what they now make as interest income. So is it beneficial to commercial banks? The answer is yes, if a chunk of that money finds its way back into the commercial banking system. That means they have more money to lend to the real sectors, and they can make more money from it. And when commercial banks being an engine to growth in the economy, it means that businesses will have access to more money. But on the flip side, if more of that money is outside there in circulation, not within the commercial bank, then it's not beneficial to them, because you and I cannot aggregate that money together to lend it to one person.
Indeed, this is also interesting. Now, how can CBN, ensure transparency when it comes to communication, in the implication of the significant increase in money supply, to stakeholders and the public? How can they make the public understand all of this?
So the Central Bank of Nigeria has done a lot of things in the past, but they have this arm that is in charge of engagement. Engagement in the sense that people need to be enlightened why they need to do certain things or why they shouldn't do certain things. And the CBN also has a responsibility to also make sure that people are well rewarded for their finances, right? So in terms of what the CBN can do to be able to encourage or inform people about the different tools that are available to them, the CBN can come to Soak News, for example, and take out a program and enlighten the public on what the intention, the spirit behind the regulations that they are issuing is. And beyond just putting out their guidelines and circulars on their website for people to download, they can make deliberate effort to put it in corners of newspapers as well. So there are a lot of things the CBN, can do to put the information out there. But beyond the CBN, the financial ecosystem has a lot to do in terms of enlightening people as well. Today, the commercial banks have one of the highest retail footprints in the whole of the Nigerian business ecosystem or value chain. Those retail footprints should be used as outlets to reach out to the rural people, for them to be able to understand some of these big economic jargons that the CBN uses. So the old mama in the village will not know what your narrow money supply is or your broad money supply is. But when you explain to mama that when you bring your 1,000 naira, instead of putting it and tying it at the head of your wrapper, when you bring it into the banking system, we can be able to use it to bring down the cost of that tin tomato you're buying, because we can now lend to the final end users at a lower rate, and that input cost translates to the output price that you are buying. By the time they begin to understand the importance of putting their money within the banking system, then it will be beneficial to both the economy and the old mama on the street.
Indeed, indeed. Now let's look at regional cooperation, right? How can Nigeria collaborate with other African nations, by way of trade, basically, to ensure that the financial ecosystem just keeps moving smoothly, basically?
Okay, when we talk of regional cooperation and interregional trade, that's why we established the ECOWAS, the African Union, and things like that. For our West African region, we have ECOWAS, right? But recently, we see about 3 countries pull out from the ECOWAS arrangements, primarily because of the queue. I don't want to talk much about that because of the sensitivity to security. But in terms of no country can operate on a self-sufficient level. Every country needs what we call trade to survive, primarily because of what we call economies of scale. If you look at the principle of comparative advantage, it states that countries should focus on producing things where they have comparative advantage over other countries. That way they bring down the overall cost to the company to the barest minimum. Now let me explain what that means. If Nigeria has comparative advantage in producing premium motor spirits, they should focus on that and leave things around maybe AGU and all that. So the question of interregional trade comes into play, first of all, with countries in the Western region identifying what they have comparative advantage in its production. Now, the question whether Nigeria can produce PMS of fuel, whether we have comparative advantage in producing PMS, is another topic entirely that we can debate and talk about for a whole day. But if you look at the cooperation within the region, the first thing that each country needs to do is to identify which products can I make cheaper than my neighbor. That is one. Then two, the talk of an inter-Africa currency is long overdue. The African region is still, for lack of better word, linked to their colonized masters, or colonial masters, sorry. Yeah, reason being that we still use dollars. So if you want to buy something from Ghana today, that is just 2 hours drive from you here in Lagos or somewhere, you need to convert your money first to dollars before you convert it to Ghanaian cedis for you to be able to buy something in Ghana. That is mental slavery. We should have the African currency to fast track what? An inter-regional cooperation. Again, we should increase activities around free trade areas across Africa. Today, if you want to travel from one European country to another European country, you just need your Shanghai visa. And you can move from one country to another. But if you want to go from Nigeria to another African countries, very few accept the ECOWAS passports. You have to still get either some form of visa on arrival or visa. So those kind of restrictions should be relaxed to encourage inter-regional cooperation. So we need to first of all identify where we have competitive advantage or comparative advantage. We need to identify or promote a single inter-regional currency to be able to trade amongst ourselves without recourse to the greenback. Then we need to fix our trade relations. So increase trade, traveling and visa restrictions, and create more free trade zones.
Interested. Now, what can the African Development Bank, do to basically harmonize policies to ensure that we promote, a whole lot of economic integration within the African continent?
So the African Development Bank was established with the primary purpose of developing the African nations. So they're supposed to provide some form of financing for government to improve their infrastructural capacities. But the problem we've seen in recent time in developing countries has gone beyond the problem of infrastructural inadequacies and has gone to the problem of bailouts. So you see the African Development Bank spend more of their resources bailing out African government than investing actually in infrastructural development. Last 2 years, we saw the way Ghana Eurobond tanked, across the continent. Not just African Development Bank, even IMF have to come for bailouts for the Ghanaian economy. This year, we've seen how the Nigerian exchange rate has tanked. We've seen the Afrism, we've seen IMF all coming to the rescue of defending the Naira and to no avail. So the role the AFD needs to play is the role that it was originally created for, which is to support infrastructural development. Because if those infrastructures are not there and we are playing dress up, at the first light of wind, will also be very, very exposed.
Thank you very much, Ben. Now, what are the long-term visions for our economy now in Nigeria, talking about the financial ecosystem and our monetary policies? What key principles, should guide future decisions, basically?
So, you have asked two questions. One is a vision. The other one is the principles, or what I'll prefer to call systems. Vision comes from a leader. The vision of the Nigerian financial system should come from the people at the helm of the affairs. I would like to see, this is what I would like to see for vision, in a financial system where our Naira is strong. Growing up, I used to visit neighboring countries like Benin Republic. And when I went to Benin Republic, with as low as 200 naira, I could buy 1,000 cefas. Today, 1,000 cefas cannot buy 200, 1,000 naira cannot buy 200 cefas. So the vision is to see where the naira is back strong, strong against its peers. And the strength of the naira comes from our ability to produce value as a country, our ability to produce comparative goods that are competitive in the international market. That is the vision I will see for Nigeria. If this is my era, I view cefas. If you ask my dad, in their era, 1 naira was stronger than $1. Today, 1,000 naira cannot buy $1 for you. In the 70s, a naira can comfortably buy $1 plus. But today, even in today's black market, 1,490 naira cannot buy $1 for you. So I want to go back to that era where naira is strong. That is the vision. In terms of the principles and things we need to put in place to be able to achieve that vision or actualize that vision, first, we can't put all the blame on government. It boils down to every one of us, those of you watching us, even those of us in the studio. If you examine yourself, how many things that you are putting on are actually made in Nigeria? So you are part of the problem why the exchange rate is falling. If you look at your clothes, imported fabrics, look at the glasses, your earrings, your shoes, your shirts, your polo, everything is imported. How do you expect your currency to be strong when you are busy patronizing another country's goods and services? We've demeaned our own products. So if somebody wears a traditional attire like myself now, you might look down on the person. In fact, we've institutionalized inflation, imported inflation. So if you want to go for an interview and you dress the way I am, you've lost it automatically. You need to wear a suit and tie. Who produces suit and tie? China. Total things we use in Nigeria from China, but we don't even export up to 1% to China. So those are the principles we need to begin to change. We need to think Nigeria first. So you look at, go out to your street and just count the number of cars that are passing. How many of them are made in Nigeria? But we have people assembling cars in Nigeria, but we don't use them. In fact, the economy has, given that pedestrian to people that drive those American finished cars as. So those principles need to change. We need to think Nigeria. In those days, when we are saying $1 was 1 naira, our parents prioritized using products. But those are no longer the case today. The case today is that if you want milk, you want to buy the foreign brand for your children. So those principles need to do what? Change. It needs to change, because if we don't get that right, no matter how the grammar we speak, no matter how the fine blueprints we write, the fundamental problem is still that all of us are still consuming imported products. So the vision for financial stability starts with you and I. It also starts with government.
Indeed. Thank you very much for all of that. Now, Ben, I just want you to give us your final thoughts on this topic. Then you could also add something to it. Talking about investment, do you think this would positively impact on investments of other nations, foreign investments into Nigeria?
Okay, so I'll answer the question first. On foreign investment, if you notice, since the government took over, our foreign direct investment has been reducing. In fact, our foreign capital inflow our net foreign capital inflow has been negative on consistent quarter on quarter for the last 3 quarters. The reason being that investors are losing confidence in our system, primarily because we can't repatriate back the funds of those that have invested. So in investments, government needs to do all it can to regain that confidence of investors, right? So government needs to put everything it needs to put in place to make sure that investors' confidence is built back, both foreign and domestic. So as a domestic investor, you are not sure of the stability of Naira. And I'll give you a typical example. As a domestic investor, you go out there, you buy a product. Say you import this pomade to sell. You buy it, you are owing your foreign supplier $10,000 for argument's sake. By the time you bring in that product, dollar is 1,400 naira. You cost your product at 1,400 naira. Now, you finish selling at 1,400 naira, say a month later or 2 weeks later. The same $10,000 you're owing your foreign supplier is now costed at 1,700. So the business automatically becomes a loss to you. And that's why you see companies pack up and leave.
Right.
Because it doesn't make sense for you to do all those economic activities and the bottom line is not seeing it, right? So in terms of foreign exchange stability, needs to be gotten right. Then for foreign investors, you do your business, face this foreign challenge, the stability challenge, but you're not even able to repatriate your funds back to pay dividend or for some form of royalties to your investor. So that becomes the challenge. So in terms of my final thoughts, and the money in circulation is good if it's in the hands of the commercial bank so that they can lend it to the organized sector to produce goods at a cheaper rate for you and I.
Thank you very much, Ben. It's always a pleasure to have you with us in the studio on Market Insight. Yes, that has been Ben Nnamdi Okorie, the MD and CEO of Najem Business Solutions. We'll be going on a break now, and when we return, we'll continue with the currency market. Stay with us.
My name is Dr. Rafiu Oladipo.
My name is Baba Jalal Repega.
I'm Reverend Juliet Benite.
I'm Godio Didi.
My name is Professor Oladokun Sulaiman Olarawaju.
Sook News is on the ground, loading.
Very enlightening, very educative, and entertaining.
Thank you to Sook News.
So I'm happy that Sook TV has come into existence.
I'm happy to be here in the Sook News.
I want to encourage you to subscribe to the channel and keep watching news that makes sense.
As Browning said, one's extension of one's reach should not exceed one's grasp, or what is heaven for. And I think Sook News is doing that.
Africa needs a voice of truth, and Sook News has become one of them. And get ready, get ready, get ready.
And keep watching.
Keep watching Zook News.
Keep watching Sook News. It's a place to be.
Keep watching Sook News.
Many thanks for joining us. You're still watching Market Insight, and now we're going straight to the currency market. We just do that briefly because we really need to call it a day on the show. Okay, on the parallel market, we have the USD, the US dollar, buying at 1,460 naira and selling at 1,472 naira, while the pounds is buying at 1,845 naira and selling at 1,865 naira. The euros, on the other hand, is buying at 1,550 and selling at 1,570 naira. And currently today at the official market, yes, the USD was opening at 1,113 naira and closing at 1,482 naira. You can see that the official rate is, is running after the parallel rates at a very close range now. But that's all we can take today on Market Insight. At Desua Eramosele. Join me again tomorrow for an even more exciting package. Have a lovely day.